And a very good morning to you, and welcome to the Triggercharts pre-market rundown for Friday, July 10th, 2020. It's been quite the couple of weeks. We weren't here last week. It was July 4th, and we were celebrating, and the markets were closed. So hopefully you had a great holiday. But we're going to go over some of the things that have happened over the last couple of weeks, as well as what's going on right now. As you see, the futures are moving along very rapidly. There's some news this morning that Gilead's drug Remdesivir, if that's how you pronounce it, actually suppresses the disease COVID pretty well, and in fact has a good overall review, I guess it would be called, of it actually stopping the death rate in the patients that took it. So there's some good news once again that we're starting to see. It was kind of a couple of weeks where we didn't really see a lot of really good and new information about a lot of the drugs out there from companies like Moderna, although we saw Novavax really shoot up higher when there was some extra money put in. Anyway, let's go over some of the basics. Let's talk about what's going on right now. Let's also go over quickly the disclosure that's in front of you, that this discussion itself involves potential risk, as does all investing. This is not a recommendation to buy or sell any security at all. It is simply an educational discussion. So let's talk about some of the things that are going on. But before we do so, a couple of things. Number one, if you have any questions in terms of stocks that you want us to look at, review, check out, put them over in the chat. Second of all, I'm going to send a little poll up right now, because I'm kind of curious. We do this from time to time to see what particular trading instruments that you're trading, and to get a kind of feel for the audience and what it is. We'll let that sit up for a little while, as there's a lot of people in the room today. We'll get that going. But let's talk about what's happening with regard to the markets, what markets are looking forward to, what they're trading on right now. And we're going to, of course, get into the technical indicators in a second. To the right side of this chart, you'll notice that we have a beautiful uptrending chart for gold. The GLD ETF has been just terrific. I mean, obviously this low where that sell-off came in March, but if we kind of can strike that out right there, it kind of looks like the NASDAQ, doesn't it? Whereas there has been this uptrend since the start of 2020, and we can probably draw some very nice parallel lines on the bottom side and on the upper end of the range, also to look at where this is. And it looks like we saw a little bit of a pop top there, or an exhaustion move, but we've seen that before, right? We've seen it back here in April. There's a lot of thought that there's going to be no other alternatives really for your money, that people are saying, hey, do I want to put my money into bonds? Do I want to put it into stocks right now with valuations how they are? At the same time, gold, hey, you know what? Maybe we're going to have some inflation. Now, with that in mind, the CPI numbers came out this morning. They were negative 0.3 for the month on a month-over-month basis. Annualize that, that's a negative 3.6%, and that is not inflation. That is clearly deflation. Even with all the back to work and getting reopenings and all the things that are going on right now, what we're seeing is that there's a continuation of a general deflationary spiral that's happening around the world. And markets actually maybe are reacting to the Gilead news today, but they also may be reacting to the thought that, hey, you know what? Maybe the Fed is still in play for a while. Maybe the Fed looks at the fact that we have an unemployment rate that's over 10%. Clearly, 11% was last Friday's number. We also have the situation where we have no inflation. And you know what? Well, we can still keep on doing what we're doing, pumping money into the markets with the use of all sorts of extraneous means like quantitative easing, buying bonds on the open markets, etc. All right, everybody has voted. Actually, two more out of all of you, only two people haven't voted. So there's one more that just came in. So we're looking for one more vote or on the poll, and then I'll give you the answers on this. There you go. Looks like everybody. I think everybody's voted. All right, so here's the answer. What do you use most often in terms of trading instruments? Forex, 6%, stocks, 56%, ETFs, 6%, which I think that I'm actually kind of surprised with that number. Futures 31%, and nobody in this room today, nobody at all trades options, which I think is kind of interesting. So we'll gear our discussion to primarily stocks, ETFs, futures, and some Forex, of course. But it looks like Forex and stocks are the number one positioning here. Kind of interesting to see who's listening with you. We're starting to see futures move up a little bit. That's top line. I have this set up so I have a nice view all day long of what's happening at a glance. Well, next week we have earnings season starting to Cometh. Coming around the corner, we have the financials, the banks, the places, you know, JP Morgan, Goldman Sachs, Bank of America. All this, the banks are going to start to report. Now, there's a very low bar, and expectations are set pretty, I think, low in terms of their net interest margins, as well as the overall outlook from many of these stocks. Remember, we just had the Fed come out with their numbers in terms of what they expected for the banks moving forward, and limited them on share buybacks and shareholder plans and dividend increases. Wants to make sure they have enough money to weather through the storm that they see moving forward. Now, if I will tell you, I would venture to say that with all of this, if we do start to see that the numbers turn from the virus, if we do see there is some either vaccine or some treatment, and that's again a big if, the banks can actually do pretty well here, because a lot of the discussion is all about, well, we have this big unemployment, we have a problem with the economy, and the banks don't do well in that environment. The banks also don't do well in negative interest rates, which some people are starting to talk about. They also don't do well in a flat yield curve. So if we can start to see a little bit of better news, there is the potential for the financials to start catching a little bit of a bid right now. Clearly, the pandemic is not over at this point. Daily case records are at a record in the U.S. Hospitalizations somewhat on the rise. Daily deaths somewhat on the rise from where we were. That's very low, but that's also a lagging indicator. Question is, will we shut down again? Regional, there are some possibilities. We've already seen places like California and Arizona talk about that. Miami talked about some rolling back of the phased reopenings, and that doesn't do anything to instill confidence in individuals, although, again, markets are having a much different reaction to all this. It also doesn't instill confidence for people that are looking at the economy, because the economy basically, if it's going to be shut down or at least slowed or hampered or stymied by any reason, that the fact that there's going to be restaurants closing down and people out of work there, possibly movie theaters staying closed. Although next week, amongst all of this in Florida, Disney World is going to start their opening process with Animal Kingdom and the Disney World theme park. So I guess Mickey is going to be on the loose again here. One of the things I heard this week I thought was really interesting. Check this out. We've talked about what? We talk about a V recovery. We talk about a W recovery. We talk about rolling Ws. We talk about an L shape, a U shape, a square root. Something I heard just yesterday, which I thought was really cool, was the idea of a K recovery. So I think this is kind of interesting, where if you think about what's happening right now, think of the K. We have this drop down of everything all at once, a slight move up of other things, and now we're starting to see a move down, right? So let me do a little bit of freehand here. So we saw the drop for everything. Then we saw this kind of general rise off the bottom, right? And then we saw that financials and leisure and areas around the economy are doing this, while technology is doing this. Kind of a K recovery. I think this was kind of a fascinating look at something that I've never really thought about before, never even considered, but that's kind of what's going on right now. You know, right up top here, we have this, in terms of the market recovery, this is technology and healthcare doing really well, but then we have the financials, we have leisure and hospitality, we have real estate to a lesser degree, and you look at some of these areas that aren't doing well. Yeah, there's a bunch that are kind of in this mid-range here that kind of, you know, came up and they're flattened out, not doing anything. But this K recovery, or whatever it is that we looked at here, looks like kind of eyeballs on this. When we say the low, I can draw. No, I was going to draw the high up there. These are the the good and the bad, if you will. And I think that what we're looking at here right now is this whole idea that there is this bifurcation, not only of the markets and the economy, but bifurcation in the upstarts. I mean, looking at, again, small caps still not doing well, financials, autos, leisure, but the NASDAQ, the technology, the healthcare doing well. There's a new debate that's coming into the market recently, this whole narrative about the Dems are going to be sweeping. And we hear this every election. I wouldn't pay too much attention to it right now. We still don't have the official, Biden is still the presumptive candidate. Now, I don't think anything's really changing there on the Democratic side, but we still don't know who is going to be the vice president. We still don't know what's happening. Yes, there has been a big change in the overall rankings of, the differential between polls, I should say, of Biden and of Trump. Things change. It's only been the last couple of weeks. This is all happening since we were seeing a change of his positioning on, some of these rallies and the virus and some of the protests. So we don't know really exactly what's going on, but there is some discussion about the market starting to price in a Democratic lead. And what does that mean? Well, already Joe Biden was out yesterday talking about, hey, you know what? We're not going to really worry about the stock market and focus on it and really compulse on it like we are, like this current administration who should be focusing on something else, blah, 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 blah. Okay, fine. I got it. I understand. But what are the markets saying? And that's what we're really talking about. It's not about the politics. Leave the politics at the door. It's what the politics are going to do with the markets that we really want to look at and really kind of separate that. So it is being discussed, and Joe Biden is talking about an increase in corporate taxes and possibly taxing some of the more affluent people. That could be an impediment to the markets going forward as we get closer. I would really consider looking at this in August. I think August is the time period that we should be looking when he names his vice presidential partner in this, and let's see what happens. Right now, just a lot of conjecture, a lot of polls that we really don't have the answer to too far out. One of the things we did see in the economic numbers is that employment numbers are starting to move in the right direction. Yes, it is a little bit wonky. These numbers are a little bit crazy, but the employment numbers are starting to move in the right direction. At least we're not seeing all the layoffs. However, while this is the first stage of a recovery, and that is clearly occurring right now, where we see that the ISM indices, like the ISM manufacturing and the ISM services, the services hit 57, which is clearly over the 50 demarcation point, the hurdle that takes us from contraction to growth, and above 50 is considered growth, and that's good. So I'm happy to see that. The question is, with some of the reversals of what we've seen lately in terms of the reopenings and the phase outs of the continuation of some of the progression through the process of reopening in places like Texas, California, Arizona, Florida, Georgia, you know the names, you know the list. And where we're seeing that there are a continuation of occurrences with regard to cases, I don't know how much longer. I think we're in that K recovery concept also for some parts of the economy, but not for others. Services is probably going to see a backtrack. Employment is probably going to see a backtrack. 1.3 million people applied for new employment benefits just this week. So there are a lot of things that are happening right now that are contradictory. Again, step back like we always do. It's all about time frames, right? If you're looking at every single indicator tick by tick, very difficult to see the longer term trend. Markets are overheating again. We got a +3 on the KRI. Let's see where we are right now and kind of zip over there. Yep, so we're +3. It did pop over a little bit yesterday. This is the key reversal indicator available on the trading app store. By the way, I'm going to mention right now that anybody that does sign up for a subscription for the Commander series, and by the way, thank you for making us the #1 overall most highly rated and popular indicator package on the TradeStation trading app store. That is something, I think, a testament to how well this works. I'm telling you, listen, I've told you this before, I'm telling you this again, because this week, again, I got calls. I got emails thanking us for helping them stay out of the wrong side of the market and helping them stay in on their trades, making money with what they're doing. So it works, okay? These indicators are designed and built for a specific circumstance. The one you're looking at right now is very simple. All it does is tell us of overheating zones and oversold zones. And right now, what is it saying? Well, it very clearly shows you on the left-hand side of this chart, and only one symbol is used. This is it. This is what you see is what you get here. There's nothing extra. It's 29 bucks a month. It's something that you kind of look at every day. You just see, okay, where are we? When we're in a market that's kind of in the zero line, okay, that's good. When it starts moving up, that's good. When it starts reversing back off of these upsides and we start to see some crazy things happening, watch out. Right now, where are we? Well, we kind of, we're in an overheated zone that was historic. Then we started to get into a question of, okay, this has to resolve a bit, and we start to stay with the same trend. Now we're starting to see a little bit of a reversal on the upside. All it's telling us is that things are heating up and that buyers are in control. And then when you look over to the right, it says, hey, what does it say? The overall market is measured by the KRI algorithm is mildly overbought. Continue to watch the trend of the market and the key indicator, reversal indicator for insight on further overheating or movement towards equilibrium as the short-term bias favors buyers. That's what it says right there. It gives you a nice discussion. Depending on where we are on this, it will just tell you. Very simple. The other thing is that if you do subscribe, I mentioned this in the chat, take a look at your chat. If you do subscribe, well, we're going to give you, to the Commander series that is, we're going to give you a free 4-hour Traders Playbook advanced coaching series that's on the web. You can check it out at your leisure. It's a timeless piece we did a few years ago, but it's just all about technical analysis, supply, demand, equilibriums, etc., and what's happening with markets. All right, moving back. So I mentioned the market was overheating again. Okay. One of the big issues that we have, I'm going to take 2 minutes, I'm going to go to the charts. One of the big issues we have right now, going into the end of this month, is that we have the income cliff, the fiscal cliff that's happening. We don't know what the resolution of this is going to be right now, but you know, with regard to the $600 per week that we have for the excess federal unemployment insurance, that's ending July 31st. And there is the talk about new stimulus, I don't know, $1 trillion or so, you know, a little trillion, $1.2 trillion, $1.3 trillion. The potential discussion that we've heard recently is that this $600 per week, and Treasury Secretary Mnuchin discussed this yesterday, that this $600 per week is not necessarily going to be what we have in the future. Because right now there is a discussion about 2/3 of the people that are getting this in conjunction with the money they get from their state is actually more than they would have made if they were working. So they're going to kind of do something to fix this. But there's some stimulus on the table, and it talks about the idea of where we are in infrastructure bills and all that. Next week, CPI, that was this week actually, import-export prices, industrial production, retail sales, housing starts, UMich, and we're going to watch a few stocks and take a look. This one, a couple of them are really on fire, just on fire. So let's take a look at that right now. And up again today, another SPAC, which happens to have the symbol SPAC, Spartan Energy Acquisition. This is something that we looked at, got a little piece of. I picked this up yesterday in the $10 range. No, excuse me. I picked this up yesterday right on the lift off of 12s. I think it was right on the kickback to about 1250 yesterday on the 30-minute chart when it came right back inside and then held that a couple of times, picked that up. Currently trading at 1684 from yesterday. What a move we had off of the bottom. And look at what this is. This is SPAC, a special acquisition company. And basically what they did is they're looking right now at Fisker. Yes, Fisker, the company that didn't make it from the electronic vehicle, but the potential is they're looking to put the assets of Fisker inside of this as a trading company. And this is going to be another company that, you know, is going to be in the electric car, which has been so hot lately. Same thing we saw here, right? You know, this was a SPAC that we saw. We picked this up for you a long time back that was trading at $10 forever, dropped down, and then just ramped. We saw a big move on this yesterday, up about 15%. Started to see the breakup. Now, here's what I want you to look at and just focus in on the charts. It's very simple. We made it color-coded, and there's the Commander series, and we made it very easy. On the bottom, you're looking at the aileron. The aileron is an add-on to this package. What you get with the Commander series is basically everything but the aileron. So you get a chart, and you get these lines that come in, which are key algorithmically reasoned points of resistance and support based on price and volume. The Peter Stottlemyre market profile algorithm that we utilize, and we took basically this, the radar, which is part of this also, and boiled it down and condensed it down over time to where the most important and key levels are for you to be looking at for support for bounces and for resistance for breakups and for breakdowns for shorting. Very simple to look at, right? You got red, green, right? Let's look, you know, if you get a yellow, well, it's an indication that there's a long that is being identified in this, and then you take that position. Once you get into a green, which is a confirmation, depending on what bar you use. Here it was a yellow that hit, kind of a little messy action right inside of here. You moved in at about 1655. It got you out at 1655 or 1650. There was no trade with the gray. You saw a confirmation on the aileron on 30-minute. You saw another hit that happened right here. Again, 1651. It was a false positive. You got out, then you got back in right there at 1651 again, and you moved up from 1650, and you would have been out somewhere at about 1865 on the breakup of the stock, and then into a new altimeter that was formulated. And once that happens, when you go below it, if you're in a trade, it pulls you out. Right now, above 1934, I think that was 1934, you can just hover, 1934, there was another move on the upside for 30. So whether you use the 30-minute, whether you use the daily over here, it all depends on what your time frame is. But on top of that, you get this wonderful, this look over here of what's happening where we have, and we look at this, this hasn't been around that long, but basically, oh, actually it has, SBCE. We got a long alert on the 30-minute. We got a long alert, let's see, on the 60-minute. Let's get back to that. Long alert on the 60-minute. Long overall on the 240, and then right now it's out, which is what it's showing you. But you're starting to see a progression, which will give you a higher confidence in the trade, where you're looking both from right to left and left to right. SPAC, okay, you got those long alerts that happened. Again, up another, what, $2 today, up 13.5% after being up 30% yesterday. But you got these long alerts that occurred very nicely off of the base. You know, if you were watching some of this and you're watching the SPAC space, you would have seen that. Tesla, what can we say bad about Tesla, except that I don't even understand the valuations. But all right, so what? Let's look at the charts. Again, very simple. You had a yellow. I mean, just let's follow along very easily, right? We got a yellow, which says, hey, on a 30-minute, that was an area that should be looked at back in the beginning of July as the potential for an opportunity to go long. What was happening? Well, same thing was happening here. We saw a daily bar that showed a yellow right at about a little over the 1,000 level, which coincided with what we saw over here. Then we saw another day that there was a gap higher, right? This big gap, then another gap higher. You finally got out here at about 1345. Then it quickly got you back in on a 30-minute basis, kind of ran up from 1346, got out somewhere about 1360, and now it's just sloppy consolidating action. And on the daily chart also, take a look, consolidating action, no buy or sell. Aileron, on the other hand, is all on the upside, looking pretty sharp for this name. So let's say, you know, one of the nice things about this, and let me explain something to you, and I think this is really important. You may have a preconceived notion about a stock, a name. You may say, oh, I really don't like that. You know what? I went into a Shake Shack and I loved it. I'm going to be long. Well, Shake Shack is not only right now showing us that there is a short on a daily that broke down again at about the 50.38, currently trading about what, 47.85. But basically the trend on the short term has been down. The aileron is showing us weakness on a daily basis from about the 25th of June. And then when we look at the aileron on the 30-minute, and again, whether you use 30-minute, 60-minute, this is all just for discussion purposes. That's really important. But also when we look across here, let's take a really important look at this when we look across, and that's why we did this. We are the only indicator on the trading store app for TradeStation that has been able to put multiple time frames in one single row. Everybody else, you got to put different time frames in and you get different levels. But let's take a look here. Let's just really highlight this shack right there. And what do we got? Short, 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 short. Now, if you're thinking about going long, which may be a one-day wonder right now, or the trend may change, you're going against the grain. The whole point of having multiple areas, right? 1, 2, 3, 5 different time frames that we show you here is to build the confidence in the trade. So we look at, what do we look at? Well, as I've always told you, and I'm going to tell you again, because we do some training here also, as well as all this. Well, we have moving, always looking from right to left, right to left, right to left. Say it with me, right to left. Okay. Quick question. There's a question about upgrading the indicators to the phone app. These are a little bit too, in my opinion, there's a little bit too much of complexity right now from what I can see for the iPhone. From what we could do, this is a trading tool that needs some space. It needs to breathe on your desktop a little bit. I understand we like to trade on our phones, but nonetheless, I think that there's sometimes a little bit of some desk space that you need to look at what's going on. But right now, what I would do is use your phone to trade and use the charts on here. Also, TradeStation does not have the tools built yet to actually put this on a web trader or on, it sits within their system. Got a couple of people asking about WRTC. What is it? Oh, RapTech. Yeah, this is interesting. Frank Curzio pointed this out. If you know him, he's a good friend of mine. Some time ago, RapTech is the alternative to the taser. Basically, it shoots a like a string or a line or a cable, and it wraps around you. Like if you shot somebody that was running away from you at their legs, it wraps around them, wraps their legs, and they can't do anything. They just fall down. You kind of it's a non-lethal. Interesting. Right now, it's in a downtrend on a 30-minute. Clearly on an uptrend overall, has some really good aileron strength going on from a momentum standpoint. It is in a buy. We tagged this about the last time I'm talking about 975, currently trading what, about 1250 right now pre-market. Interesting. This is another stock that has seen a lot of ups and downs. Clearly a vertical move when we look at the last move right now, because we're looking at some non-lethal alternatives, and police are looking at that. Quick question. Do you think that gold and silver are a buy right now and something good to have in your portfolio with a 10% allocation? I mean, we just looked at gold. I mean, silver has been doing well. Silver looks like has the potential to break out up about 10 cents today. I mean, clearly we're starting to get, silver does these things where they get these big jumps and then pull back. I would look for, starting to maybe build your portfolio, but look for a pullback into probably with SLV right about the 1666 level if we get there. But if not, you can start seeding your portfolio over these levels. You have a clearing. And obviously, if we look left in this particular instance here, I mean, it's clear, right? When we look left, there's nothing going on really. You got to get above 18 and a quarter or so. But generally speaking, everything else was looking pretty well in terms of the longer term. But let's talk about one more thing. If I'm looking at this and something that you want to do for the long term, let's kind of look at this. Did I do it? Weekly. There we go. Weekly. This is silver weekly. Not looking so good. Doesn't look as good as it was, right? It was up at 40 here some time ago, and then it's come down. So let's kind of look at where we are, right now. So you did break over the top again. You did get a weekly buy signal on here. And if I put it right here, SLV, wait for this to build for a second, and we'll see. We got a long on a daily basis. Weekly is, it's because it's a short alert on a weekly. It will come up when the market opens. It should come up on a yellow if it stays there. We did see also a long 4 on a daily, but you have a triple top here right now on silver. I would just be a little bit wary because, like I said, you really need to there's a lot of congestion above here. But if you want to start building your portfolio with inflation in mind, I really have no negative on that. Nikola, this is another one of those crazy stocks that are in there that are related to electric vehicles. Yeah, there's your long alert. See right there? Came up. One other thing I want to see here, Bed Bath & Beyond down, obviously, 24% yesterday after closing stores. This stock, it looks like, has, you know, it did stop pretty well on a little bit of support. I'd like it to come down to about 753 if I was even thinking about getting involved here, because we really don't know what's going to happen with this stock. So, you know, generally speaking, it looks like we're off to a good start. Futures are up. I would not be surprised if we see a reversal on the Dow a little bit again, and I would not be surprised if we see some profit taking in the Qs moving into the weekend. Anyway, we'll have this on the YouTube channel over. You can check that out at Triggercharts, over at triggercharts.com as well. Please do me a favor and get to the Commander Series. There's a 10-day free trial for everything. So with that, we're going to sign off for today and see you again next week. Be healthy, be safe. See you then.